What's going on, everybody? Welcome to our stock trades. How's everybody doing today? What's going on? What's going on? How's everybody doing today? All right, ladies and gentlemen. Hope you enjoy the light show there. Was that pretty fun? What do you guys think? What do you guys think? Testing, testing, 1, 2, 3, testing. All right, ladies and gentlemen. Hope that was good. What's going on, Brandon? What's going on, Patrick? What's going on? Oh, we got some panic in the market, but not too much. Not too much. All right, so go ahead and make sure we get our bearings into play here. Let's stop the share for a little bit and let's kind of revolve this back here. All right. So nothing too unexpected. So for folks that don't know, if you don't recall, remember the lines that we drew, the technical analysis lines? Again, this will be level 2, part of the mastering. It's not that hard, honestly. I think fundamentals is harder. Like, if you don't understand fundamentals, you can't really you should not be in the market, right? If you look at it, it's bouncing off of this the blue line that we drew, and on the 30-minute, it's definitely bouncing off of that. And if you go to the 5-minute, it dipped down a little bit right on that 200-day for the 5-minute and the support line, and now it's basically looks like it's trying to trade in between the 50-day and the 200, but again, that's only on the 5-minute, so we don't really care about those things. Only for like short-term minded folks and the day trading, right? So overall, it's looking pretty good. Like I said, we're going to be consolidating. This is going to be a new consolidation price, I think. So you could see back yesterday, the dip was like, for like around 411, 410. The dip was, and then all of a sudden it got picked back up. And today the dip is 421. So you could see these are higher highs, right? And you got higher lows. So this bottom low is lower than this. So this bottom low is higher than this one, and this bottom low is higher than this one. So we'll see how far this continues. But here's the thing, guys. When you're in a bull market, and I think it's just better to look at the daily, because the daily tells you a lot. So first off, let me show you what a bear market looks like, right? So stock spiked, and then it just basically went under that 200-day super moving average. Now, if you don't recall, back in the day, we talked about stage analysis. Let me see if I can find it. Stage analysis, Al stock trades. See if I can find the video. Yeah, can't really seem to find the video, but what I can do is I can see if I can find the image. Give me one moment. There it is. So let me see if I can help find this, because if you don't recall, back in the day when we used to be when the stock was 60 cents. Oh, by the way, if you haven't done so, hit that subscribe button, right? So if you truly care about Clover Health, and if you truly care about wanting to spread the word of this, I'm the only person talking about this, so we need to build a bigger community. Okay, so for folks that haven't subscribed yet, it's simple. Log in, hit the subscribe. If you're logged in, just press the freaking button, right? So it definitely helps. All right, so the photo is not that great, but it does the trick. People can get it, right? So if you don't recall, back in when is this spike? 2021. Back in 2021, things spiked, and then it started going under the 200 days. So the black line, the squiggly line, the black one is this 200-day simple moving average, and the red line here is the 30-week moving average. You can just kind of call it the 200-day. This is from the book written in the 80s and 90s. It's one of the books that I have listed in the stock terminal down on the education site, right? And I really like this book because it really breaks down technical analysis into a really easy, stupid to learn process. And really that's what it is, right? So you can see the stock price went down, and then the goal is you kept getting these fake outs trying to break through that 200-day, right? And that's what this was, right? You could see the red line here is the 200-day, or you could just call it the around 30-week moving average. And you can see it was trying to break out, but the stock price kept falling and falling and falling. And you got this minor breakout, which is why I ran up to 150 back in 2023 of August. and then it basically fell down, and then it went really down to 60 cents. Around in May, it went ahead and well, also in August as well, May and August, it started going up, and it started going up right around July again, right around here, right? And a lot of people thought this was going to be a fake out because it's dropping, but then this is what differentiates people that just do technical analysis and fundamental analysis. The technical analysis showed some weak points. Many folks thought it was going to go down, but that wasn't the case because uh, um, the fundamentals they came back gap positive. So you could tell like ultimately this thing was going to go higher, and then you got that insider buy. So unfortunately, a lot of people, in fact, people that are close relatives to my significant other, sadly ended up selling, which sucks, right? Because they thought it was going to reverse down to 60 cents or 80 cents, and they were just going to keep trading that. Unfortunately, things don't work out like that. You got to understand the fundamentals. And all of a sudden we had a breakout above the 200-day. So everything I described to you is stage 3, stage 4, and now we're at stage 1. And all of a sudden now we broke out. So now we've entered stage 1 to stage 2. So you can call this stage 1.5. So now we're above the 200-day moving average on the daily chart. So now what's going to end up happening is you're going to get some fake outs, fake ins, fake outs, but ultimately you're going to basically see this thing continue to go higher and higher and higher and higher. Now, the question you have to ask yourself is, well, how high can it go? And again, that goes back to fundamentals, right? But this is Palantir. For folks that don't know, Palantir just had their earnings. I think they had a 30% growth, but their American products are growing at around plus 45%. It's a $50 stock price now. It's a $113 billion market cap. Okay, that's huge. And if you look at it from its lows, it went up around 692%, aka around a 7-bagger. Not too far from Clover, right? Clover is like a 6-bagger now. Okay, so you're going to start seeing some parallels as these risk-on plays, truly not really risk-on, I would say, because they're free cash flow positive, start to dominate the market space. Okay, so this is Palantir, and you could see we could go back to stage 1 again. This thing is repetitive, right? And this is why it's important to go from level 1, level 2, level 3, which is like the fundamental analysis level 1, technical analysis level 2, and level 3 is options analysis, where once the stock reaches its intrinsic value, you then do cover calls and cash secured puts, and you can make a lot of folks on our terminal is going to make anywhere between $100,000 to $500,000 a month based off of their their risk tolerance, and some even more, right? So you could see the stock went below its red line for the Palantir, and then it started doing again, going to the stages, stage 3 and stage 4, right? So it started going down. You got a little fake outs here, but ultimately it went above the 200-day. So now you have multiple levels of resistance from the 50-day, which is in yellow, and the 200-day, which is in red, which is also considered the 30-week, which you can see here in red. Okay. And you can see that it's always been above it, and now it's really above it. Now, the yellow line, a lot of people like to call those institutional investors lines. So if it's above that, it means institutional investors are pushing up the stock price. And if it's below that, it suggests that institutional investors are some of them are selling and exchanging hands. Now, the thing is, a lot of this can be manipulated. So you really can't, you got to go back to fundamentals again. Fundamentals always is like the rock, because at the end of the day, you're investing in a stock, which is part of a business, an underlying business. So you can't just kind of detach yourself from a business. Now, you have people that do that, and they say that, oh, the fundamentals don't matter. And the people that have said that, unfortunately, went from $393 down to $2. And is it really that low now? To $4.30, which is AMC. Okay. So apparently to them, technicals and fundamentals don't matter at all, right? So this is why it's important to understand these things. But again, a lot of people that have played with this, they've lost a lot of money, and now that is the school of hard knocks. And hopefully they get educated. Maybe about 5% of them do. It's rare. Usually when they get beat down like that, people tend to give up. Okay, so you could see here that we're in this phase now. Now the question is, you go ahead and take. You say, oh well, that's Clover and that's us. That's Clover and Palantir. I don't think that can work for other companies. Okay, well, here's Oscar. Oscar went below its 200-day, which is its red line, and then started undergoing stage 1 and stage 2, and that's where it's at right now, and it keeps going, right? It keeps going. All right, it's testing it multiple times, and what you could do is what a lot of people are doing, is you could have a lot of people trade this, right? What they do is they go all the way like so to be a little bit more conservative, and they go from here, and some actually better draw a better line. They go like this, and they go like this, right? So a lot of folks are doing that, and then they can draw another line like this, like this. But that you don't really need to draw that line. The other line is sufficient. So now you can confidently say that this thing's going to go back up to at least 22, right? What people do is they trade, they trade, in this line, right? Um, and then that's how they trade, right? But overall, regardless, you could see it's above the 200-day. So now let's go back to Clover, and you could see Clover's just started this. This thing just basically soared, right? Now, a lot of people are hoping that this thing goes down under $1.70, but there's a lot of resistance. There's a lot of support lines here. You have Vivek's first buy, you have Vivek's second buy, and then you have all the share buybacks. There's a lot of level of support here. Okay, but ultimately, that's kind of where we're at right now. Currently, the stock is $4.28. If you guys don't recall, now it's $4.30. It used to be 422, and it just went up, right? So it's going to kind of play these Houdini games, and you could do the 5-minute here to see. You see how I told you it's going to bounce off of that, right? So it's going to play these little games, but ultimately it is fundamentally and technically responsive now. So you could see how strong this is, the stage 1, stage 2, and stage 3, and stage 4. Now, beautiful part is, as people, have joined our platform, and a lot of people are part of the lifetime access, I send out research analysis of what I think is happening to the market, right? And people have realized that our research is on point. It just sometimes I post every week or 2 week, but and now and sometimes I post every day, right? But overall, I post when it's important, right? Uh, um, and speak softly and carry a large stick, or speak with purpose. That's what we kind of like to do. We don't like to bombard people with a bunch of bullshit. So overall, I think now we're starting to get into the phase of stage 1.5 to 2, and we'll see when stage 3 will happen. But regardless, by the time stage 3 happens, a lot of us are going to be multi millionaires, right? And again, people that know who we are, you guys already know that we don't talk, we don't puff smoke, right? We actually teach, what we preach, right? So we follow. I follow what I say. Um, But overall, it's looking pretty good right now. I'm very happy. There's going to be a lot of, I think somebody posted this. Let me see. Somebody posted this in the stock terminal, and I think it was really good. Um, uh, yeah, you see here, 93% MBR for CVS. So this is great. They all need Clover Assistant. Um, Someone yesterday posted Ray Dalio, and I really enjoyed it. Boom, 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 boom. See if I can find anyone. Yeah, it's insane. Can't find it. Well, we're gonna have to go up. We're gonna have to go up the chat. Someone posted it. I'm gonna find it. It's worth it. It's worth it. And then we'll talk about all the Monte Carlos and the support and resistance right now, but this is gonna add value if you kind of practice this. Let's see. Oh, here it is. There it is. Yeah, I knew it. Thank you. In fact, let's open up a new terminal. Actually, let's open up this. Let me respond. And let me give you. Oops. Okay. Strong find at Snow. Good. So this was posted by Ray Dalio. Okay. Very great. Let me just see what's going on here. Oh yeah, thank you, thank you. Oh wait, the clickbait. What clickbait? What are you talking about? There's no clickbait. Come on, man. Come on, man. No clickbait. Right? I mean, there's no clickbait here, right? We're doing research. Okay, so oh damn it. I lost the damn post. You see, you distracted me. See this? All right, Tyler. See what you did there? Okay. All right. So this is good. This is if you can internalize this, you'll live better, right? So watch out. Okay, there's a book called Principles of the Day or Principles by Ray Dalio. I recommend reading this book. Definitely, if you listen, guys, this guy started his hedge fund in a 2-bedroom uh apartment. Okay. Now I like to listen to people that I wouldn't say they're wealthy, but they've done well for themselves. He has a market cap of 14 billion. This guy obviously is smart. You know what I'm saying? He's smart. Wrote this book. I recommend buying it. Again, I don't make money off of recommending this book. This is just for my audience to get better because I want you better, right? I want my audience better because I'm going to hang out with you guys in Vegas in the future, right? I want to have good conversations with you guys, right? So let's start working on those things. All right. So invest in yourself is the best form of education, right? All right. So let's read this. Okay. So watch out for people who argue against something whenever they can find anything wrong with it, without properly weighing all the pluses and minuses. Such people tend to be poor decision makers. You see, that's really good, right? Oh no, it's okay. No, it's all good. It's all good. I mean, come on, man. I'm working, man. I'm trying. You know what I'm saying? I'm doing the research. I try for you guys. Yeah. So no, it's okay. I'm just messing around. Um. So this is actually really good, guys. I mean, if we can just internalize this, just spend for a second here. Someone said my videos are long. I get it. My videos are long, but I mean, come on, guys. I mean, this is the what do you think? Being rich is easy? It's hard, dude. It requires a lot of thinking. Okay, so all right, so I want to take that back. If you go on Twitter, you might, some jobs don't require too much thinking, and I get envious with those jobs. It's like I'm here, I'm working my butt off, and I won't go too far. All right, so check this out. The best choices are the ones that have more pros than cons, not those that don't have any cons at all. You see, the problem is, like this is an example. Yesterday, we got some selling of higher executive folks in management. They sold some some shares. A lot of them did, and they did it all at the same time. Okay, one person will say, "Oh my God, they're selling right now. This is it. They're selling. They're selling. It's a con. I'm out. I got to find an investment that has zero cons and all pros." And the issue is you got to weigh the decisions. The first thing is you have to analyze the action. Why did management sell? Oh, it's for tax obligation. Oh, it's an automatic thing. Oh, okay, done. Let's say, oh, I don't want them to sell. They should have kept it. If they truly love Clover Health, they should have kept those shares. Okay, now let's go ahead and let's weigh. Let's weigh out. Let's pretend we have a scale. Those old-fashioned weighing scales? Okay, let's go ahead and do this, and let's go ahead and put this here, and let's weigh. Okay, let's weigh this out. Okay, they just got upgraded to 4 stars. Okay, good. All right. They're free cash flow positive. Okay, net income positive. Good. Okay. All right. They activated their SaaS. Okay, good. Okay. So you see how there's a lot more positive. Oh, they did a sell, but it was obligated for taxes. You see what I'm saying? So the problem is a lot of people when it comes to, and I get a lot of folks are, oh no, no, no. And I'm not picking at you. I'm just, the whole point of if you want to enter a platform and the goal is to learn, right? So the problem is, sometimes people look at one thing. Like, for example, there's a lot of outflows than inflows today. Why? And we hyper focus on this, right? And there's some people out there that they literally say, I'm not going to buy right now, or I'm not going to X, Y, and Z. And those people tend to be bad, poor decision makers. So it's good to analyze your principles and analyze how you conduct your due diligence. Like, for example, if somebody comes at you with an issue, you can approach it in an emotional way, or you can have a systematic way and how you deal with things. And the people that tend to have a systematic way tend to, each systematic way, let's say, if done correctly, can have an alternative target point. And that target point, let's say, you design where that target point is. And let's say if that target point is success, then you'll get there. You'll get close to there. Like, let's say for a target point, okay, target point. If you want to, let's say whatever your target is, you want to make money, okay, yeah, and or let's say you have a coworker that is crap, right, and comes at you angrily, and you could go ahead and you can hit off target and just be emotional and crap like them. And then unfortunately, every dog has his day, right? I mean, it's not like they're bad people, right? But the problem is what's the overall mission? If you want a good workplace, if you want a good team, rowing everything together in unison to accomplish things that, no one thought was possible, then that's not conducive to the overall process. But if you can hit in a process and have a principle, and that's what Ray Dalio teaches, have a set of principles to help you with your path, then, yeah, you may not get 100%, but you may get around 75, 80%. You'll get close to the target. But if you consistently do this over the years, you'll get closer and closer and closer. You become a master. Okay. So again, I'm just, again, this is, again, it all starts with mind, body, spirit, and emotion. That's what it starts with, guys, right? You cannot become wealthy if you don't have wealthy habits. Okay. Yeah. You can make all this money in stocks, but then you could go ahead and blow it all, which people do. I mean, I'm telling you, go ahead, conduct a survey, go in your zip codes and go to the zip code where it has a lot of money, and go stand outside of the most expensive grocery store in that area, and go to the area that has the lowest amount of money, and go around the grocery store there and ask people, say, hey, I have a question to ask you. If I were to give you $10,000 now, just, you could do this. Ask your child. If you have children, ask them to do this. Because honestly, this is a great, us old folks, we could extrapolate what would be the outcome, right? But, this is a great example for them to differentiate between the haves and have-nots of society, to differentiate between the poor and the rich. Now, listen, what do you think the poor are going to say if you ask them? If you say, hey, if I give you 10 grand right now, what are you going to do? The poor, they want to, help, and they want to help their parents, and they want to, it's honor and respect. They will say, the first thing I'll do is I'll want to go and give my mom a present. I want to go help my mother. So I will buy her something. Then I will buy my brother something, and I will buy so essentially what they're doing is they're using that money to essentially help their family, which is great. I love that. It's beautiful, right? But ultimately, they're going to spend the products of that money, and someone else is going to make that money. And what is that someone else going to do? They're going to invest in their business, right? But ultimately, they're going to be the spenders of money. You go to the more wealthier folks, let's say, and you ask them, you go outside. You're like, okay, knock, knock. Okay, hey, what are you going to do with your money? If I give you $10,000 right now, what would you do? A lot of people, I would say maybe 60, 70% better than, let's say, the 5, 10%. Because I guarantee you go to a poor area, they're not going to say, I'm going to invest it in the S&P 500, right? But you go in the wealthy area, they're going to say, you know what? I'm going to invest this in the S&P, right? Or I'm going to go ahead and I'm going to put in my business that I'm doing, right? It's always going to be an investment. Right. And for example, let's say, if I was to talk to those poor folks in the area, I'm like, well, technically, if you were to take 10K right now that I'm going to give you, and you're going to go ahead, you could put it, let's say, as of now, Clover is paying, with his covered calls and cash secured puts, it's paying around this much. You can make $940 a month right now. But, let's make it conservative. Let's say in the next 5 years or whatever, you can make $500 a month off of that 10K, which means that in literally 12 months, you can make $6,000 off of that 10K. So you can spend that, or you can invest that. So in a year, you'll have 16K. Then you can take 16K times 5%, right? This is called compounding, right? Now you'll make $800 a month. You multiply that by 12, you add 9,600, you get it, and you keep multiplying it out, right? You have to be, and this goes back to level 3 of the options analysis, which then you have to be on the right side of the options trade instead of buying, which is gambling. You become the seller to the gamblers, right? House always wins, right? So so that's kind of it right there, right? It's principles, right? And I get it. Sometimes my videos are long, but again, the point of these videos is to teach you how I also got where I came from. Obviously, it's hard to jump to those processes without sufficient data, which is why we have our platform. But if you're going to walk anything out of these videos, at least walk it out with the mentality that I've developed for myself. All right, so there's that. So we talked about these things. Let's go ahead and talk. Do you expect Humana and others dropping out of MA New Jersey to affect you for earnings? Or I mean, I'm not too sure. I mean, I think right now they know there's going to be an effect, and I think Humana now is just cutting off the fat that's burning them cash. Yes, election day. Vote if you have not vote. What's your stock baseline assumption for a millionaire at stage 3? I mean, it depends. I would have to, everyone's different. Depends how many shares you have and everything like that. But I wouldn't individual, again, that's personalized financial advice. I can't give personalized financial advice. I'm not a financial advisor, but what I can do is I teach in our platform what intrinsic value is, and how to take someone from zero to hero to where you can calculate an intrinsic value of a company and then learn what Wall Street has been doing for hundreds of years. You know what I mean? So that's kind of there right there. Strong conviction, loosely held, be willing to adjust the new data information. Absolutely. I mean, that's what, your videos inspire me. I appreciate you, Sheriff. And that's the thing. These videos are, this is really great because sometimes, unfortunately, lots of people don't. I mean, I really like Ray Dalio because he's teaching you the principles here, right? And I'm teaching you how I use the principles. But you can, I mean, think about it, right? You go to the rich, if I give you 10, if you have children, go tell your children to give your children $100. If you really want to educate your children, go give you, especially in the summer or when they have off, be there with them because people are weird. Give your children $100. And say, I'll give you $100, and then I need you to do for me a favor. Go to the poor, ask them if you give them $10K, what they would do with the money. And then list all of the responses, okay? And then go to the rich and ask them what they do to the money, okay? And then let them come to you and let them give you the data. And then ask them why. Okay? Then you can take it where you want to take it and where you want to put your children in, and in terms of how far you want to teach your children about life, okay? All right. Good. Yeah, and hit that thumbs up button. And for folks on, so please hit that balancing button. Sorry. Nope. Subscribe button. There it is. I'm trying to find it. All right. So now that we went ahead and talked about life, please don't forget your Kanan Walker. Oh, it's someone else. Okay, good. People are buying. Excellent. Oh, they're getting good. All right, let's see. All right, what are we at here? Oops, sorry. Let's exit out of here. It's an old email there. Let's see where Clover's at right now. 431. Excellent. We're looking pretty good. Again, it doesn't take to be a rocket scientist to do technical analysis, right? Each and every one of you that are listening to this video can become multimillionaires. You just have to be surrounded with the right data and the right people. All right, so now let's go ahead and take a look at Clover Health. Let's go ahead and take a look at the minute chart here. We'll go and take a look at the minute chart, then we'll look at the hour chart. Then we'll look at the day chart. Okay, so let's look at the minute real quick. All right, so as you can see here, guys, for the minute, we got let me just drink some coffee for a sec. Hold on. Yeah, rich will always invest. The poor will always use it for bills, And here's the thing. Many years ago, right? Many years ago, I used to, someone asked me, so this is, guys, there's a reason why I'm saying this. Because I'm, throughout every video, I put a little bit of my life, right? Some more than others. A wealthy man came to me. It sounds like the start of a bad joke, right? A wealthy man came to me. And he talked to me. He said, if I give you 10 grand right now, what would you do? And you know what I said? I'm gonna be like, I would use it for my education, right? So I guess I was investing in my school. He looked at me with disrespect. I was like, what the hell's wrong with this guy? He's like, you won't start a business? Like, you'll just put it in school. You'll give it to this university. He's like, he looked at me. He's like, that's the most stupidest thing ever. And he walked off. I was like, what? Anyway, I was at a cigar shop with my future father-in-law. This was many, 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 many years ago. And I was like, what? What's wrong with this guy? What's wrong with this guy? You know, I was still an undergrad. I was like, what's wrong with this guy? And yeah, I was learning, I was dabbling, in the market. So anywho, that guy taught me a lesson, right? So yeah, no, it's there, right? That's a lot of that's a lot of many, 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 many. Yes, sir. You need to be surrounded with Al as your mentor. No, but here's the thing, guys. Screw Al, screw me, right? How about the other people on this stock terminal? Holy crap! I mean, you got a lot of smart people here, right? I mean, listen. Okay, listen. My incentive is to create a community, right? Whether you like it or not. I know, Master, you want to be all, like a, leather jacket. I'm on my own, but you're going to realize that one string can break, but a collective of string equates to a rope that cannot break. Okay, you're going to realize that if a team, you need a team. Okay, and that's the beautiful part. The lifetime access does not just apply to you, and you know this. It applies to your children. You know what's funny? We have now people that buy the lifetime access that are showing and having their children go through it. And if some of them are crafty, especially if they're 40 or 50, they're having their children go through it. And then now their children and themselves are going through it together. And then now they're talking to it. So it increases the learning. So now they can retain about 90% plus if you do that, right? And that's the beautiful part about this, right? Is the whole point of lifetime access is I want you guys here. Again, there's a lot of people that do they charge like $2,000 a year. Some like Bloomberg charges $2,000 a month. Again, they're obviously trying to make money, right? For me, I'm like, no. I want you in here for a long time. I want you in here for a lifetime. And it's not just your lifetime, for your children's lifetime. And I'm going to figure out a way that this thing can stay open even after my life, right? Because I get it. I'm not lifetime, sadly, right? And neither are you guys, right? But that's the goal here, right? It's really nice. You started your terminal under a bridge. That's so funny, right? Under a bridge, right? And now we own the damn bridge. Right? And now we're building on the bridge. This community has some really great and smart, absolutely smarter than me. Okay, all right. So we have 182. Wait, what is this coin? What the fuck is this? Wait, sorry about that. What is this? Oh, come on, CPA. It's our CPA, right? What the hell, CPA? You confused me. There it is. Okay, my bad. I confused myself. All right, 426, 443. All right, so yeah. So 440. So again, we're going up and down. So 443 is the next level of resistance, then the 463. Okay, the day. What is this? What? What the hell is this? So it looks like whenever I see movements like this, yeah. So the AI, this is funny. Whenever I see something like this, the AI is figuring, again, I'm not trying to speculate here. This is going to be some speculation. But whenever I see a movement like this, it means we're either going to go up a lot or down a lot. The AI is figuring so there's something happening right now in the mix. Usually, I've seen this before. It doesn't. Yeah. So this could be. Let me explain to you what I mean. If you look at Palantir, yeah. You see Palantir? You see this? Whenever you see something like this, it's either an internal error or something. I'm not too sure. So we'll figure something. Maybe it's an internal error. I'm not too sure. So we'll figure it out. All right, let's look at CLOV on the weekly. So once we do that, let me go ahead and get the machine learning here. Let's get the Monte Carlo projection. So, okay. So let's get the Monte Carlo loaded. And let's let that signal, and then it's going to send us the image. As it sends us the image, like I said, we're above 392. We're going to 747. We're going to go to our Boeing 747. Okay, it's going to happen. Okay, maybe that's what we're seeing. And then if you look at the Monte Carlo sequence simulation, which then basically looks at all of the possibilities and all of the data, and it graphs it to you. Look at it now, $6. Look at that stuff. Look at that, $6. You see this? You see this? Okay, so yeah, very bullish. Now let's talk business. Okay, so let's talk business. All right, check this out. Okay, so the problem is this election carries itself uncertainty. I don't think we're going to know who's president by today. Okay, I think it's going to take a couple of days, if not a week. We'll see. If it's a landslide, we got our answer. Okay, that's number one. Number two, what happens if one of them contests the election? Whether it's Kamala, VP Harris, or former President Trump. If one of them contests it, what do you think is going to happen to the stock market? I can't tell you the future, but I can look in the past and try to connect the dots. This happened back in 2000 with Al Gore, and the stock market fell 8 to 10% plus. And the contestant, the contested election, presidential election, went for 5 weeks, and it went all the way to the Supreme Court in favor of the Republicans, Bush, George W. Bush. So potentially, given that institutional investors have been pulling out, potentially, maybe they may be anticipating this. I don't know, but all I can tell you is short-term uncertainty, long-term great. Therefore, short-term equates to, for me, not financial advice. I'm not a financial advisor, but what I'm doing is I'm, buy BTFD. I'm going to buy the dip. Okay. All right. Good. How you doing, Scribana? Pleasure. All right. So good. Yeah. The community, very smart. General download sign. Oh yeah. Dragon Lord signing in. Sorry, it took me a while to read that. I don't know why. All right. So that's all I have for you guys. We're at 432 now. So we're looking pretty sexy right now. And just so for people that don't know, for folks that don't know, I don't know if this thing can. Yeah, they can't really tell, but let me tell you. So today, if you don't recall, if you look at the price action of Clover this morning, the stock went around, I want to say $4.42, right, in the pre-market, which coincides with our stock terminal on the minute chart of right now 443. So very good. All right, guys, I hope this video was of success, and I hope that you walked out of it with something. I'm going to get to work. If you haven't done so, hit that subscribe button. I appreciate all of you, and let's have fun.